This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil, and we're going to talk about what I think is one of the best signals that I look for in terms of patterns. All right, now we're talking about price action. If we can find this confluence in 2 time frames, the odds of success really will increase for us. All right, so let's go ahead and get going with this. Now, if you want to learn more about these techniques, I would suggest starting with the book. You can click the link in the description to find out more. Also, if you do enjoy this content, please hit that like button and also subscribe. Okay, so I want to start out with this little page here. Now, I have used this in the past, and I've told myself, because we get new subscribers all the time, I really want to make sure once a year at least I go through this specific thing. This you cannot hear what I'm going to talk about. You cannot hear it too much. All right. If you have an understanding of this, it will improve. Whether you use my approach or not, it will improve your ability to find the right time to be a buyer. All right. So, all right, I'm going to show you this now. The 18-month line is in black. All right. And it's basically what it's doing is it's telling us essentially where we are in the price structure of a stock, where we are in the stage of the stock. All right. There's a stage 1 base, stage 2 uptrend, stage 3 top, stage 4 decline, and then we start the process all over again. Now, in the basing process, you can't. The reason why this is so important is that when we're in a stage 1, some of the signals that you try and play, the pullbacks and strong trends and stuff like that, are not going to work as well, all right, as they will in a stage 2 uptrend. And a stage 4 downtrend, actually, if you're trying to play positive signals in a downtrend, you're obviously going to struggle. But you can play those same signals going the opposite direction when we're in a downtrend, okay? And then the topping pattern typically has a lot of volatility. You get whipped around a lot, and you get stopped out a lot of your trades. So you want to be aware of this. Now, I'm essentially explaining this if this were the S&P and we're looking at it from a big picture standpoint. But let's take it down to an individual stock perspective. We still want to do the same thing. We want to wait for a stage 2 uptrend on the monthly time frame. And you can do this in any 2 time frames you want. So this could be a 5-minute. This 18 could represent the 5-minute 18, and this red line could represent the 1-minute 18. It doesn't matter. I'm showing you a monthly and a weekly. But you can see that once we turn and we have an uptrend in place, and I'll kind of explain that in a second, we have this next time frame, and we're looking for the same thing. We're looking for a match. We want a 2 and a 2. We want a 2 of 2, essentially, is what we're looking for. Now, let me just go through, and I'm going to show you what I'm talking about with this stock, Archer Aviation. All right, we've got a daily chart on the right and an hourly chart on the left. And I can mark these as you start to see. We had the 18 MA basically rising and then topping out, a lot of volatility, right? And then we work our way down and turn to the downside, and we see this starting to rise to the upside, and you can see price action coming in and holding that line. All right. Now, at the same time that's taking place, let me just prove that to you. I'm gonna give you the crosshairs so you can see that that's the exact same time. While that was taking place and this was cupping around and we were starting to pull back, we had 18 rising and then topping out on the hourly chart, right? And then coming down and then forming a sideways stage 1 base, if you will, on this time frame, and then turned to the upside and pulled back and tested the 18. All right, so test of the 18, test of the 18. If we have that combination in place, we have the starting point for a great trade. All right, if you have an 18 on a higher time frame that we're pulling back to, and an 18 on the lower time frame that we're pulling back to, we have essentially this match, this 2 of 2 pattern that is typically very, very strong. All right. Now, if we can combine that with momentum conditions that also kind of confirm or support our thesis that this stock is getting ready to move to the upside, then by all means that you want to be looking for that. But I can tell you that I have spent a lot of time with this, and if you can find three time frames. If you can find 3 time frames that are showing this specific pattern. So in other words, what I'm saying is, let's say the monthly chart is doing this, okay? And then we have the weekly chart doing this, and then we have a daily chart doing this. So what's happening is price is pulling back to that, price is pulling back to that, and price is pulling back to that. Now, it might not happen exactly the same way. They might not look identical, but they're in the vicinity of the 18, all three. And all three are turning into a stage 2 move to the upside. All right, stage 2, meaning we had the basing stage, and now we're turning to the upside. Now, sometimes the basing stage doesn't last very long. But if you can get all 3 of these to show up at the same time, you've got a lot of power. And why is this so important? Because the monthly represents long-term buyers, okay? These guys are not traders. They're getting in and they're expecting to stay in for a while. They are not the same people as these intermediate term traders, all right? Now, these guys are looking, so if you think about it, the monthly guys, and then let me mark all this up, and then daily, right? So we got monthly, weekly, daily. Now, the monthly guys are looking to get in and stay in somewhere in the months to years, all right? So they're going to be in for some period of a few months to a few years. The weekly guys are looking to get in for a couple weeks to a couple months. All right, that would be the intermediate term time frame. And I like to use 3. So it's like 3 months to 3 years, 3 weeks to 3 months, all right, and then 3 days to 3 weeks on the daily time frame. All right, so all these guys are looking at this from a different standpoint. They're not the same people. Number one, they're different traders, and they all have kind of their own thesis behind what they're seeing. Now, the reason why that's so powerful is that you can get buyers in out of all 3 of these groups at the same time. That's where you get this kind of powerful move. Now, obviously, I'm showing you monthly, weekly, daily, and this was a daily and an hourly. But you can have it in weekly, daily, hourly. You can have that happen in all different types of time frames. And when you have that, we didn't really get, well, we did cross above the weekly line right about the same time that things started cooking on the daily, but not exactly the same. But the point I'm making is if you can find it in 2 consecutive time frames like this, and this is a great way to think about being a trader, all right? You look for the higher time frame first, and you're saying, I'm going to buy on this higher time frame when I get into a stage 2 uptrend. All right, that means let the 18 come down, let it come up, let it start to turn, and then we have price coming up and testing that line. Now, let me switch this again. All right, so now when this is moving up and this starts to pull back, now we're on the lower time frame doing the same thing. And that is why this is, because we're pulling back here, right? That's what's causing the 18 to drop and cup around. Now, what I talk about in my book is that the 18 is the driver. I have a 40 on here, all right? But the 18 is the driver of the approach. And I like it because we can find that first pullback. The first pullback to the 18, so critical. It's the starting point of a new trend in a lot of cases, all right? So we want to be on the lookout for that. If we get this type of respect for the 18, this type of respect for the 18 here, then we will see more respect of it down the road. Now, this is a little bit different, this stock, because It was basically a juggernaut move straight to the upside. I wouldn't expect it to keep pulling back to the 18 over and over again. This is a surging market phase. Stock is probably, kind of blowing off a little bit. It might break out, but and have a little follow through to it. But at the same time, this is probably just a thrust to the upside as opposed to a sequential wave that can go on for a while. All right. So just a really good understanding of this, I think, will go a really long way for you. If you learn this one pattern, one setup, I should say, then I think it really puts you way ahead of the crowd. All right. Let me know if you have any questions. Thanks.